Well, we're here from the Florida New York Stock Exchange. Today is the last day of trading of February, and we have to check with our great friend Steve Alain Lawrence his predictions about that volatility. He was right telling us, if you check the previous interview, Victor, volatility is coming, so volatility arrived. Let's see what happens. Steve, thank you for coming. As you know, Steve, the chief investment officer, which is the person that oversees investment for all of the other potential allocators in the firm. He's the chief investment officer of Balfour Capital Group. Today, Friday, February 27th. Thank you for coming, Steve. And I think the first question back to you is, well, you were right on volatility. So now, what are you seeing in the market in the beginning, let's say, of March 2026? Thank you for coming.
Well, first of all, thank you for having me. I think one of the biggest things you need to understand is that volatility can work for you and against you. So the first lesson that any investor needs to understand is when the market is this volatile, if you're used to buying $10,000 of an asset, you buy 1,000. All right, so it's really adjusting to that. Obviously, the numbers came out today with PPI, and inflation's a little hotter than expected. And these are the repercussions of the markets as we speak here. As we speak, we've seen the market come off here. So I think there's a lot of dynamics happening, including the geopolitical events. So I expect a big move. This is an opportunity. It could go down. The Dow could go down and easily touch, 48 to 48,000. But every time it takes a good backup, it's an opportunity to look for value.
One of the things that I was checking today, Steve, is that the basically utility sector, there is an ETF back in the days, very well known by the money managers, X's and X-ray LU, and Spider One, is being up around 9% in just the month of February, which then allowed me to forecast that people was looking to fly to quality, and now we're seeing today the 10 years right below the 4% yield mark, 3 and something. So do you think that panic will continue? Do you foresee anything? Obviously, it's a lot of things on this question. Anything touching the geopolitical aspect with Iran and the US? Are you seeing in your models any fear and panic that shows capitulations here? So it's again an opportunity to buy, or you think we're gonna have another choppy next month in March where you continue at least seeing some sort of volatility that is not yet providing you an uptrend in the short term?
Okay, well, I think there's almost like a new normal. Going to the utility sector in general, there's an enormous amount of demand, and the market's pricing it in. We have already seen that when you build these data centers, the amount of electricity that they will need, all right, will be absolutely ginormous. That's why the bigger players came out yesterday basically saying that they're not going to allow that to affect the consumer on a day-to-day basis, because the amount of energy that is going to be consumed to run these data centers over the next decade is going to be very severe. So the entire sector in general, okay, is going to have a lot of long-term growth, which leads to a bullish move on commodities like silver, gold. Silver will be necessary to build these data centers, without question, copper. And it is a new normal now with the advent of the AI and the power of the technology that's out there. So like in any other bull market, there are opportunities when there is somewhat fear and panic. You just saw what happened to IBM, okay, in a matter of a day. All right, so at any time and for any reason, you can see a stock come off 10, 15, 20%. But 2 years from now, it could be much higher. Like right now, I am a buyer of IBM at these levels. I think it's a phenomenal company, and I think that you're seeing that right now.
Steve, the narrative within the last 2 quarters, and we can revisit June 2025, and we spoke about that in our regular interviews, is that you should migrate to gold and Bitcoin. Definitely gold gave the people that migrated to gold a year ago, 6 months ago, a big win, where you see the gold definitely performing better than any of the other correlated assets. But we don't see that on the Bitcoin. And today, the Bitcoin again is around two. Remember, today is for you guys, February 27, 2026. Bitcoin is coming down, Solana, Ethereum. But you and I were speaking off camera about the opportunities in that sector. I don't know if you can articulate, because it's an important asset, even though it's not much a mature one. It's an important one for a lot of people that are transitioning into allocation, which are the Generation C. So a lot of people are seeing, and I want your opinion about that it might be a great opportunity to accumulate at this level. What do you think about that?
Well, let's start off by saying this. There was an op-ed in the New York Times about the BTC that basically the op-ed said that, does it really serve a purpose? So what we've seen, it's so much more than just the BTC and the Ethereum. It's in that whole sector. It's really about blockchain, but it still needs to go through its proving itself as a viable asset. All right, and that's the difficulty that it will endure. What I believe is this: the BTC will go below 60,000, and when it goes below 60,000, I think either if the institutions don't step in between 50 and 60, I think it could be a very bearish tone to it. However, okay, and this is a key caveat. What you've also seen are companies like Coinbase, which has gotten hit, and we've been short Coinbase for a while, is that they're pivoting into other parts of the market. Okay, so they're pivoting into, they're trying to duplicate a model of, let's say, a Robinhood, which will pivot, which will be under more like wealth management and other sectors that the customer can buy. I think the biggest problem with the BTC, it's the way it has to be purchased. It's just much easier to just purchase the ETF than own the physical BTC. It's that much easier, and consumers realize that.
Steve, what do you think about the artificial intelligence sector? There is a lot of booth there. OpenAI today, 27, finalized 110 billion funding, and it's amazing for this company. And I think it tells the audience and the investment community that there is no fear. And obviously, even though you mentioned, and I agree with you, that we're going to see volatility, it might be a great time to accumulate companies like Nvidia, even though they have this competition with China and a few other things. That definitely there is an important way to accumulate at this level, because any dip is viable until proven otherwise.
There's no question about it that AI and the algorithmic speed of which it's actually happening at is mesmerizing. It's absolutely mesmerizing how quickly things are happening. You take a look at a company like Block. All right, Block just laid off half of the company and the stock took off. All right, so many of the larger corporations in general are using AI to do what? To become more profitable. They're publicly traded companies, so they're only judged by one thing: how much money they can make. And that's how the street judges things. But we're in a new normal right now. There's a new world going on right now. There are new economies that are going to be created. And that is, I think, the biggest part of what's happening. The new economies that are being created.
One of the things that I checked today, when I saw exactly that, Jack Dorsey laying off half of the workforce, the stock rallying plus over 20%, is that in order to please the analysts in the short term, don't get me wrong, because I want to explain you why, most companies might copycat that, because that will have an impact on the cost structure and that saving will relate better with the analyst trying to forecast growth in the price of the company. But in the mid to long term, that's demand destruction, because obviously the layoff are going to impact the aggregated demand. So how you should play that, and I don't know if you can explain those that in a couple of minutes while you do the closing remark, because I think it's important to understand that it's a it's a confusion here how to play 2026 or the remaining of 2026 in terms of portfolio management.
Well, I mean, what we've already seen, and they've already demonstrated, Meta laid off people, Google's laid off people, Microsoft's laid off people. A lot of parts in tech, there are a lot of layoffs. What that also means is that there's going to be so much talent in general out there, and so many more new entrepreneurs. So going back to the basis that the larger publicly traded tech companies are gearing up to do one thing: crank out some numbers in more profitability, because they truly understand the power of AI and how to deploy it in a way where they can scale it with fewer people, therefore become more profitable. And as a public company, that's the job of a public company. That, the CEO of some of these companies have very tough choices to make right now, and but their only obligation should only be to the shareholders. And those are difficult decisions that they have to make when they have to lay off people. But they're only judged by one thing, Victor, and that's the bottom line and the performance of the company.
I see. Listen, Steve, thank you for coming today. I'm not as happy as usual because I see definitely the market showing us a major retracement, at least as of now, 10:30 in the morning Eastern time. But we want to put a face, we want to put a smile, no matter what.
Absolutely. And let me
And
just say
keep
this:
positive.
UBS
Yes.
just downgraded the U.S. stock market. They just downgraded the U.S. stock market just minutes ago. I am a big believer that any move down here on high quality companies is a buy. Okay, just buy quality companies with quality management. So
Absolutely.
that's what you got it. Take care, Victor.
Hey,
Like always, have a great one.
Thank you for making the time. Thank you for being in this tribune. Thank you for being so educational towards the audience. Happy to revisit with you. Hopefully you will be right. Let's see what happens in a couple of weeks, and
You
we'll
got
get back to you soon. Thank you, Steve. Thank you
Take
for
care.
coming.
Yep. Bye-bye.
Bye bye.